Hello everyone, and welcome to this MISIS webinar on the topic of digitisation in corporate banking. My name is Alex Kwiatkowski, and along with my colleague, we're going to spend the next few minutes discussing some of the trends and themes that are influencing the digitisation of corporate banking. We'll also explain some of the steps that we at MISIS are taking in order to help banks to navigate this rather complex landscape. So, what are we seeing at the moment? Well, if I start by some of the trends and drivers that are having an impact on corporate banking at the moment. Before I get to the corporate world, I think we've got to recognise there is this transition, this transformation to digital. And that transformation is definitely touching corporate banking as well. Now, what we've seen typically in recent years is that digital's tended to focus on the retail world. We've seen the drive from multi-channel to omni-channel, the proliferation of lots of different apps, largely as an evolution of where banks have found themselves, partly as a defensive play because there are new competitors coming into the market. So it's only been, I think, to be expected that retail's received perhaps the lion's share of attention when it comes to digital in banking. But that's not to say that corporate banking doesn't have a role to play here as well. If I think about it in these terms, is that corporate treasurers are also going to be using online and mobile banking services in their personal lives. So they're well aware of what digital banking can deliver in terms of value, in terms of efficiency, and things like that. So it's quite logical to say, surely that efficiency, that benefit can be extended into their corporate environments as well. So this notion of let's get digital is very much applicable to the corporate world as it is to retail. But when we talk about digital, it can sometimes mean many different people. And I would say it can have truly transformative effects. If we think of it in the simplest terms, digitising is that shift from analog to digital. And we've seen that in a whole number of different ways across the world that we live in the last 10 to 15 years. But to take it a stage further, and I really like this quote from Gartner, is that what digital can really do is transform through the means of changing business models and providing new revenue generating and value producing opportunities to really drive a bank and its customers forward. So in the context of this call, that's what I'd like us to consider the transformation of digital to be. So it's doing something materially different. It's not just small changes, it really is a large transformation to what corporate banks and their customers have been able to do really to this point. And what I think we're seeing now is a willingness and a recognition amongst banks that they have to do something to satisfy the needs of their corporate client base. And that's translating itself some quite interesting sort of spending. So the market for software in corporate banking is certainly growing. If I look at the figures from IDC, who estimate that in 2015, about $4.3 billion is going to be spent on software in corporate banking. But importantly, it's not plateauing. We're not reaching the peak. If anything, we're seeing that peak extending. So in 2016, it'll grow. It'll grow again in 2017, and again in 2018. So we'll be seeing about $5.3 billion per annum being spent on corporate banking or in corporate banking on software. A CAGR of 7.2%. Very, very healthy given the times that we've been living in. And what this really translates to, and the reasons behind this, is that banks themselves recognise they have to invest. A recent survey by Capgemini found that over 50% of institutions indicated they intended to invest over 30 million euros in digital over the next 3 years. And it's being done for good reason. If we look at some of the challenges that have been existing, it really comes down to a very stark choice of digitalise or disappear. And there are some fairly worrying trends out there that should compel corporate banks to take action. 65% of corporates feel banks don't understand their needs. That was something which IAT found in their research. Gartner again, 54% of institutions having less than 45% of their corporate banking products digitally enabled. And for me, that means they're missing out on being able to deliver the next generation of services to their corporate clients. We've talked around customer centricity in the retail world for a long time. It's equally as applicable in a corporate environment as well. Banks need to serve their corporate clients far better. But they also need to get the strategy right. And perhaps the most interesting and one could say damning statistic of all is found from the latest research from McKinsey, in that only 20% of banks which they spoke to have a digital strategy. So it feels as if they've maybe made some steps on the road towards digitisation and transformation, but really they haven't seized the opportunity. And there are dissatisfied corporate clients out there who are crying out to have new services put in front of them through their online access and maybe through smartphones and tablets where appropriate, that says these are the sorts of things that we need to do through digital means. What do I mean by some of the services? Well, I think there are some of the around meeting the objectives of corporate customers. So that means using working capital efficiently in terms of raising finance, managing cash and payments, international trade, and also the fundamental around protecting the business through effective risk management. So if we expand it a layer further, all of these things I think can have a digitised element to them, whether it's asset finance, corporate lending, cash pooling, liquidity management, letters of credit, and the all-important risk elements. They all have a digital enablement as part of them, and they should all be digitally enabled, because I think that's what really banks are looking to try and do, to drive some of that efficiency. It's also about driving away or eradicating for quite some time. We know there is rampant process inefficiency. It stifles growth. There's huge amounts of either duplicate or manual processes. In the several hundreds of processes in a bank's back office, it impedes pricing flexibility. It damages the customer onboarding process, and it certainly hurts the ability to deliver new products and services effectively and with agility. So these problems have been around for quite some time. They're not all new for 2015. But in 2015 and beyond, we can start to use technology to eradicate some of these challenges with the transition to digital. Because that transition means that banks and their corporate clients have to remain relevant. We know there is spending pressure caused by regulators. There's pressure on margin. There's pressure to try to be more innovative. It feels to me as if banks are in this perennial, we've got to play catch up. We're always one step behind. Well, perhaps through the use of digital, they can be much closer to the cutting edge. They can help to focus on their cost reduction initiatives, but without compromising their service standards. If anything, elevating service rather than causing any further issues. And boosting sales enablement. We know that corporates want to have new services, things like EBAM coming down the line, the ability to have services that allow them to manage their cash positions and lending portfolios far more effectively. These are all things which digital can start to transform. And also can allow the business to expand. If there have been struggles to scale, whether within the corporate bank or within the corporate client, digital is one way to alleviate that. It allows for legacy operations, legacy technology, and legacy processes not to be swept away. It's not a magic sweeping broom or a magic wand, but with digital we can start to eradicate some of those age-old problems. But it will mean to the evolution of the technology infrastructure. What else to share with you? Well, I think it's important to understand the digital priorities of corporate banks. Again, using some McKinsey data as an example, is that a lot of focus has really been around the back office in terms of corporate banking and their transition to digital. A complete move away from, say, the retail world that's been more fixated on the front office. But in corporate world, it's really been around the back office, managing things like cash management more effectively. But also not just around cash management. What I've seen, and I think this McKinsey data sort of shows, is there's an interest now to get into some other areas, and lending being a good example. What we haven't seen yet is the full end-to-end digital transformation of a corporate bank. It's been in fragments. It hasn't been conducted, say, in the front, the middle, and the back office with any degree of sort of consistency. And what that means, I think, is therefore there's an opportunity which exists. So where have banks digitised to date? So it's been largely around servicing and operations and IT. It's been less focused on the front end. And that, for me, feels like maybe a missed opportunity so far. But if it was a missed opportunity to date, it's a great opportunity for the future, because it means that we can start to see corporate banks getting much closer to their corporate clients, relationship managers being able to deliver a better service. And if you remember the statistic that I shared a few minutes ago from IAT, around the 65% of corporates feeling that their banks really didn't understand their needs, we should therefore start to see that be reduced very sharply, because let's be honest, it really needs to drop down quite substantially. So there are the market trends and drivers that I've been seeing. Again, not just from the Mises perspective. We've shared with you some of the thoughts that other, say, research firms and the professional services companies are seeing as well. So it feels like it is a kind of a pivotal time for the corporate banking world. And with that pivotal notion in mind, let me hand over to my colleague Tim Tyler to cover some of the aspects that we're also seeing specifically within Mises.
Some very salient points raised, I think, there, and I certainly concur with the comment that it's the pivotal moment at the moment. And one of the reasons that it is such a pivotal time around this is some of the competition that we're seeing in the space around non-bank organizations. There's a new wave of fintechs which are coming through and are starting to compete with the banks on the business that traditionally corporates would have just turned to their bank for. And as a result of that, we're seeing huge pressure on margins within the bank, at the same time as the transactions that they deal in are becoming more and more commoditized. And again, repeating some of the messages that Alex has mentioned, we've seen a lot of transformation so far on the retail side of banking and a lot of digitisation going into those processes and that access for retail customers. But on the corporate side, it's been a bit of a slower ship. A lot of those investment dollars so far have been really focused on retail, and the corporate banking side has lagged behind in the steps that it's taking. And that's really opened up this middle ground that these fintechs are starting to compete in. And they're across whole different sectors of the traditional banking arena, whether it's from handling purely treasury transactions, whether it's purely looking at elements of supply chain finance. They're chipping away at the blocks that the bank would traditionally have had, or the banks plural would have had a monopoly over. And so that's really starting to challenge the banks. The legacy systems that the banks have got need to be transformed to be able to compete with the non-legacy systems that these new fintechs are building from scratch, focused on the niche market that they're actually competing in. And done so far to try and compete with that. Well, in many regards, they've been looking at the sticking plaster approach. Very hard to perhaps transform some of those back office processes, and processes both in terms of software and systems, but also the very manual overhead still that many banks have around what they're doing. So some of these sticking plasters have come out in terms of trying to glue bits together of a front end for their customers. Alex mentioned that everybody's aware of digital banking, if you like, from their interactions with their banks on their retail side. And we're experiencing what I call this corporate crossover now, where people have expectations across all sectors of what they deal in, because they're expecting that level of digital interaction now. And what the banks have been doing so far is putting small elements in place which they're trying to gloss over and make appear as one. But there are still cracks which are very much present in those strategies. The lack of consistency and the lack of aggregation of data when presented to the customer becomes very apparent that really it's not a holistic view that the bank are providing them with. It's very much this, piecemeal approach to trying to present a single front end to the customer to hide all of these legacy siloed back ends. And that's presenting a threat, I think, to almost every part of the banking business. Now, I won't go through each of these separately because you can read those on screen, but I'd like to pick a couple of these out just to highlight to you some of the challenges that having this fractured infrastructure is really causing, the problems that are inherent within it. So, spiraling costs and tighter margins. One of the great challenges we have and banks have is this cost of onboarding customers. In a digital world, you should be onboarding a customer once, and that customer is there then across all of your different product lines that you offer, all of the different P&L lines that you have businesses aligned to within the bank. You should have a single customer that you're onboarding just that one time. But typically what we see is that you're having to go in each of those different product areas and onboard those customers separately. And onboarding is a huge cost, and we've got to do something about that. You've got to get that down to being just that single step process of bringing the customer on, ensuring all the relevant KYC checks are done, but doing it in just that one central place. And that's challenging other things then, because you start leading to inefficient operations. You can't scale that effectively to be able to service those clients, and that then presents challenges as to how you enter new markets, and hence the goodbye growth. You struggle with what you have. How can you grow that effectively to be able to challenge both the incumbents and the new fintech digital challenges that are out there? And that then leads on to sales inefficiency. You don't have this single view of your customer. There's still that lack of aggregation around what your customer is doing. And a particular point under sales inefficiency, and something that many banks that I talk to are reporting, is that their relationship managers, their RMs, aren't really relationship managers. They're performing far too many back office administration tasks to be able to effectively cross-sell, upsell, nurture your clients. And that challenge is, it's incurring cost, it's enabling these other players to come into the market. It's just overhead that you've got to get rid of. Your RMs need to be focusing on managing relationships. And that leads to losing business to your competition, because again, these more agile entrants or other banks that have started to adopt a wider digital strategy are enabled to reduce all of these overheads. The margin pressures for them, while still there, aren't so impactful upon what they're doing. So we've got to turn our outlook around to make sure that we're looking at the key pain points as to what digital can do and how that enables you as a bank to capture that opportunity. Well, with digital, you can improve your efficiency, you can reduce your cost, you can improve that user experience which everybody is looking for today, and you can look at straight-through processing. And I'll touch upon this again in a moment, but we need to think about STP as more than just within the bank. In this digital world, your bank is just one element in that entire process flow. And we've got to meet those demands of those digitalised corporates with a digitalised bank. That allows you then to win with added value services. It's the golden grail of being able to have that view of your customer, having the right data in the right place at the right time, which extends beyond your view of the customer, because actually that's a view your customer wants of their relationship with your bank as well. And most banks at the moment are very poorly placed to be able to bring that together for customers. That also gives you an agility to grow. better service, and connect with your customers. And this enables you to boost your transaction volumes, and in this more risk-averse world that we bank in now, that means you can focus on transaction volume and fee-based revenue around that. And of course, once you start bringing all of this data together, internally you do then start getting that insight into your relationship with your customers. And turning it full circle, that then better enables your relationship managers to do those cross-selling and upselling activities to bring more of that fee-based revenue into the bank. But how do you get there? What have you been doing to get there? What does that path to success look like? Well, in my experience, what banks have been doing so far, broadly speaking, I would liken to a hot air balloon. A hot air balloon is very much easy to launch. You just lay it out, turn your burners on, and off you go. But once you've launched, it's difficult to maintain control. Actually steering that in the direction that you want to go is very hard. And if you're not careful, you'll end up coming back to earth with a bump. And that's what I've seen so many times across banks in terms of a quite narrow, quite blinkered approach to going down the digital route. There might be smaller things that get launched, but they don't often stick, or they're not exactly what the customer's after, or they take on a path of their own. For example, who controls your digital strategy? Do you have someone in your bank who has responsibility for digital across the corporate business, not just within cash management or liquidity management, not just within trade, not just within treasury, but has that overall view of where your bank needs to go and has control of it? Or is your IT controlling that? Or perhaps even is your marketing department dictating what you should be doing? When in reality, this all has to be business-led. What is of most benefit to the underlying business and the business owners, and that shared P&L that you all contribute towards? And to get there, what journey do you need to take? Well, I've mentioned the failures, if you like, of aligning to how a hot air balloon might launch. And I've mentioned it also previously about sticking plasters, trying to glue this together. What I've seen a lot of over the last number of years is that a lot of banks have gone down the approach of effectively So as I just mentioned, the path to success doesn't really want to be aligned to how you would fly hot air balloon. But this challenge of sticking plasters, of using wrinkle filler to fill in those gaps and try and hide the age of some of your back office systems perhaps, it's coming across to your customers. Alex mentioned earlier that an IET report said that 65% of corporates are reporting that banks don't understand their needs, and McKinsey is saying that 20% of banks have no digital strategy in corporate banking. Glue and this wrinkle cream, this wrinkle filler, as per the image on screen, simply isn't enough. But there are steps that you can take to start moving in the right direction. It's a long, complicated process perhaps to begin overhauling all of your back office systems to try and both break them apart and bring them together. So what can you do? How can you start digitizing that value chain for your corporates? And the cost aspect with the growth that you want to achieve as well. Well, whilst digital isn't all about channel, a good starting point is to get the channel correct. Because if you've got the channel correct, you can hide a lot of ills that are going on in the back office. But you have to do it correctly. You can't just use that sticking plaster approach. You've got to think about having this single, globally consistent multi-channel platform that brings together, aggregates in all of your different products and services, both for yourself as a bank, but also, and critically important, for your customer. It better enables a frictionless journey for your customers to be able to navigate through not just the specific product they're looking at, but also from the bank to better enable some of that cross-sell capability that is key to improving revenues and fee generation that we get from the transaction volumes that you can achieve. So a way of doing that is looking at channel not just as the primary point of digitisation, but certainly an important and critical point. But thinking about what you need to do beyond just those individual business products that you might want to be offering. What we see with a lot of channel implementations is that it focuses on online and more now on the mobile experience, but it doesn't really address what might be within what we've called this common services platform. So you've still got a very fragmented approach to enabling your customers to transact. And by that, what I mean is you want to onboard your customer once, which we mentioned previously, and the impact you can have in reducing that onboarding overhead. But it's also about the experience for your customer in terms of what might come across as simple things that aren't important, but really fracture the experience that your customers will have, make it more challenging, and really, do they want to bank in a relationship where it seems like they have multiple banking relationships rather than one? So that comes down to points such as notifications. Really simple. I want to know when X happens. Well, surely they only should be going to one destination to manage that. But what we typically see is, okay, well, you go to your cash system to manage your cash elements, you have to go to your treasury system to manage those areas, and on it goes. And that increases the fractured nature. And it sits across a whole spectrum of different areas, which we've highlighted on the screen at the moment. So again, I won't dive into each of them separately, but you can see there's a whole breadth of service that is commonly being missed out with this single front door approach of just putting a sticking plaster across the top. And then it's extending channel beyond just that notion of online and mobile to really thinking about what else you can do with your customer that really improves A, their experience, but B, reduces your cost and overhead and reduces your customer's cost and overhead. And that's things looking at file services, for example, but more importantly, I feel, it's looking at full end-to-end connectivity between the corporate, in the sense of perhaps an ERP system that they might be running, whether it's SAP or Oracle or what have you, and having a flow from that through your, in quotes, channel to your back office platforms as well. And it's there that you can get even more added value out of delivering the right system that brings everything together for your customers. But as I mentioned, channel isn't just the only item you should be thinking about in terms of a digital strategy. You also have to be thinking about, in this context, are looking at areas such as EBAM, electronic bank account management, and being able to have that integrated through to your banking platform. And for yourselves, perhaps in a back office approach, it's looking at things such as NT798. It's going further and looking at BPO in the trade world. So there's lots of other forms of integration that you need to be thinking about and ensuring that your platforms are open enough to be able to do that. And opening up platforms as well is a key point and a key thing for the future. So we talk about open, or there's a drive, a discussion going on around open banking and allowing others access to your systems, to your processes, to be able to automate and produce that integration for you. They might not be, some of these other parties might not be part of your bank. They might not be part of your corporate customer. They might be independent third parties that are delivering functionality which will actually bring customers to you and drive some of those transactions that you need. It's things such as the API integration, and a great example of that is Deutsche Bank's Autobahn. But we're seeing, again, within this fintech activity that's going on, independent applications being developed that could benefit you by having integration to your platforms. And it's a driver that I think we'll see more and more of over the coming years. So it's not just about your channel, it's not just about some of the integration that you do. I think what we've really got to consider when we say that digitisation is more than channel is that we've got to ensure we cover it off in a full front-to-back process. We've got to think about the full life cycle of not just the transactions that we want to do within our bank. We've got to think about the overall interaction that we want to achieve between your corporate customer and yourself. It's more than front to back, effectively. It's even more than doing that. It's beyond the view that you have of your bank bang in the middle there. You've got to think about the environment within which you're playing now and within which you're competing. So, yes, absolutely, you have a relationship with your customers, but you've got to think about partners as well, and who else might be being involved in some of those processes. And partners might be buyers or suppliers in a typical trade finance type area. It might be other providers of services, financial services that you might not be providing directly yourself, but you need to integrate them into your processes. Or on the other side, it could be app providers. It could be these independent fintechs which are producing stuff where your customers want access to what they believe is their data. And of course, you've also got to have this consideration of what might be coming along in the future. You know, is the Internet of Things going to change radically how you behave as banks? Well, if you don't have the right digitized processes now, when something like blockchain comes along, not just in payments perhaps, but as a public ledger, whether that be in trade finance again, or whether it be in another area of business where we're just using these new developments and new technologies that are coming along, if you're still on a very legacy system without some of these enablers around it, you're going to remain on that slow boat. You're not going to be able to be agile in the approach to the changes that are going to come in the business market. And that whole consideration for me means that, as I say, it's more than front to back. Effectively, you've got to think along the lines of front to back squared. It's not just your front to back, it's your customers' front to back as well, and the ecosystems that go around it. You've got to think beyond digitizing pieces. You've got to think about digitizing your enterprise. You've got to think about beyond individual siloed platforms that you have at the moment and bringing it all together. Mises has FusionBanking Corporate, and this is a componentized platform that allows for step-by-step digitization, and I think that's a key piece there. You can't do a complete radical overhaul in one. You've got to be able to take a step at a time, but ensure you're taking those steps in the right direction with platforms that can interact and talk to each other. This can help accelerate your digital strategy and, importantly, in this day and age, maximize your revenue and efficiencies. And ultimately, of course, it's about delivering on your corporate clients' expectations. So we can provide more information about that if you contact the email address on screen now. But what evidence is there beyond just us talking about how you can digitize the enterprise and the steps that can go into it? Well, banks that we have experience of dealing with, we bought stats from those based upon implementing elements of digital strategy and doing it effectively, taking it in that right direction and doing it well. So an example there, a US bank doubled its revenues when it delivered to its customers a genuinely combined trade and FX channel. We have other clients that have increased transaction volumes with their customers by 40%. It enables as well, we have to remember that we are answering RFPs, so banks are answering RFPs from their corporates. And having some of these right platforms in place and the agility that goes with it helps you win those RFPs as well. To close, I'd like to say for taking the time to listen to this session today. I'd like to thank Alex for his contribution earlier on. As I say, if there are any specific questions that you have, please feel free to reach out to us and we can come back to you on those. But for now, thank you for your time.